Good evening. Good evening. We will start in a few minutes as soon as some other people joins as well. Okay. 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 Our topic for today will be national income. We will be talking about the important topics. Hmm? Okay. So our topic for today will be national income, and we will be discussing about the circular flow of income, like just the important topics, the topics which are important for your examination. So circular flow of income, as in we all know circular flow of income में होता क्या है? Circular flow of income में basically what money and services का whatever the like whatever shift is going on, that comes under your circular flow of income. Like circular flow में first we need to know what are the two types of flows. The two types of flows that comes under circular flow are real flow and money flow. Money flow, from the word we can understand that flow of money is happening here, and real flow as in flow of goods and services. Like for example, हम लोग अगर कोई firm के लिए we are working, the service that we are giving to the firm, that comes under your real flow, and we are getting paid for it, so that comes under our money flow. Circular flow of income is an important topic for your examination. There are three sectors, the three types of models. One is the first one being your two-sector model without savings and investment. This one is not so important, but you might be asked without savings and investment. The second one is same two-sector model, but that is with savings and investment. Then comes your three-sector model, and then the last one is our four-sector model. We will be discussing about the two-sector model without savings and investment first. So what are the two sectors? From the word we can understand that two sectors are involved here. So what are the two sectors? The two sectors are households and business firms. This one we are talking about without savings and investment part. Okay. So from the households to the business firms, for example, as I said, like there will be people from the households who are working for the business firms. So flow of services from the households to the firms. And obviously, when we are working for a particular firm, we won't be working for free. So from the business firm to our side, to the household side, what will happen? Flow of payments. This is the first part. So from the household to the business firms, flow of services, as in we are working for the business firms, and from the business firms to the households, obviously we won't be working for free. So flow of payments, we are getting paid for the services that we are providing. Then, so we can say that flow of services is our real flow, and flow of payment, that is our money flow. I hope it's clear to all of you till now. Then from the business firms to the households, what is happening? Obviously the households, they will be buying goods and services from the business firms. So from the business firms to the household side, what is going? Flow of goods and services again, because the business firms are the ones who produce goods. So from the business firms we will be buying those goods, and obviously we won't be buying those goods for free, so we have to pay for the same. ये रहा हम लोग का flow of payments. Okay, so this is basically our two sector model without savings and investment. Two things that we have to keep in mind is यहाँ पे equilibrium condition कहाँ पे create होगा. See, flow of payment from the business firms to the households, it is assumed that whatever money the households are receiving, they are using it to buy goods and services from the business firms. So this one will be equal to this. So whatever the households are earning, they are giving it out in the form of payments to the business firms, and whatever the business firms are receiving, they are like this one. Whatever the business firms are receiving, they are using all the money to produce goods and services. So that is where our equilibrium condition lies for the two sector model without savings and investment. This is not so important, but you need to study this because in case it comes, you will be able to attend it. So this is our two sector model. Then we will be discussing about two sector model with savings and investment. Okay, the same thing, even here in two sector model with savings and investment, we will be taking two sectors into account, that is our household as well as our business firms, right? The same here as well, from the households to the firms, flow of services, and from the firms to the households, there will be flow of payments. Now comes the downward part. We will be buying goods and services from the firms. So flow of goods and services from the firms to the households. And then for those goods and services, obviously we won't be getting it for free. So we have to make our payment. So this is our payment. Now till here, it is clear that it is our two sector model without savings and investment. Where does our savings and investment comes into the picture? Now see, in the previous diagram, the equilibrium condition was what? That whatever the households were earning, they were giving it out to the firms in the form of like they were paying it for goods and services. But in this model with in savings and investment, it is assumed that whatever the households are earning, some part of it they are using it for payments and some part they are using it for their savings. So this is their savings part. Now, if you're saving it in your own home, basically if you're saving it in your own home, what is it happening? It is going out of the circular flow of income, which means that it is a leakage. See, you can call your savings as a leakage from the circular flow of income. Because why? It is going out of the circular flow. Now suppose that can be one point. Another point, what can be it? That you are depositing the money in a bank, financial market. You are depositing the money in a bank, right? So what happens now? The firms, they will obviously be in need of money. They will obviously be in need of loans. So what can they do? They can ask for loans from the banks. So now this very savings that you have deposited in the financial market, you are giving it out to the firms, or the banks are giving it out to the firms in the form of investment, right? So savings was what? It was going out of the circular flow because we were not benefiting the economy in any way. Lekin when the same money is coming back into the business, into the circular flow in the form of investment, that can be called as what? It is an injection. So investment can be called as an injection. So the same money that was going out in the form of savings, it is coming back into the business in the form of investment. So this is basically what you have to explain in your two-sector model with savings and investment. That whatever money the households are earning in the form of payments, first in the two-sector model without savings and investment, they were using it in the form of payments to the firms. They were just like spending it all. Lekin in two-sector model with savings and investment, what is happening? They are using it in they are saving some money and they are also making their payments to the firms to buy goods and services. I hope the two-sector model without savings and investment and with savings and investment is clear to everyone. Okay. Now, we will be moving on to our next topic, as in our next circular flow, that is our three-sector model. So, in three-sector model, everything would be the same, but the government sector will come into the picture. Because for the two-sector model, what were the two sectors? Those were our households and our business firms. And in three-sector model, our government sector, the extra one that we are having is our government sector. So, the same diagram we will be making here as well. Households say, okay, savings. Just to make it quick, I am okay. Savings in the form of investment, and it is going to whom? The business firms. And the first initial thing that we drew was flow of services, and for that we obviously won't be working for free. Like whoever's asked us to work for free, we obviously won't be doing that. So payments, and from firms to the households, what is happening? Same flow of goods, and from the households to the firms. If we ask the firms for free, they literally won't be giving us anything, not even a like piece of biscuit. So from the households to the firms, we have to give them the payments, and then now comes our government sector. What do we pay to the government sector? Both the households and the firms, we pay what? We pay taxes, right? So here comes the taxes. And what do the government gives to the households? The government gives to the households transfer payments. Transfer payments, as in you can see that as old age pensions and all that, or factor payments as well. And factor payments. As in, similarly, as we are working for the firms, we also be working for the government as well. So we will be receiving a payment for that. So that comes under your factor payments and transfer payment, as in old age pension or scholarships, things like this, which we are getting from the government, but the government is not expecting anything in return from us. And from the government to the firms, obviously the government also makes purchases. So government purchases and subsidies. So the government will be giving, they will be purchasing goods from the firms as well, just like we need goods from the firms, they also will be needing goods from the firms. So they will make those purchases and give them in the form of payments, and what they will be providing the firms subsidies to only those firms which are in need of money. Suppose a startup who needs money, the government might give them subsidies. Then comes your four sector model. I hope the two sector model without savings and investment, with savings and investment, and the three sector model is clear to everyone, hopefully. Okay. Then comes your four sector model. In the four sector model, the new thing that comes into the picture is our rest of the world, as in the foreign sector. For this also we will be making the same diagram from the households to the business firms. So from the households to the financial market, what is going? Savings. And from the financial market to the firms, investment. The same thing, flow of goods and services, or flow of services you can say to be more appropriate. Flow of services, and from the firms to the households, payments. And from here, from the firms to the households, again flow of goods and services. I'm doing the whole diagram again so that it works as a revision for you people. And the households have to make payments to the firms. Clear till now? Now, here we are completing we have completed the two sector model here with savings and investment. Now, government sector, to the government sector, what is happening? We are paying our tax. Both the households as well as the firms, we are paying tax, and from the government to the household, factor payments and transfer payments. Right? Now, from the government to the firms, what are they paying? Government purchases and subsidies. This is our three sector model completed, but we are talking about the four sector model here. So four sector model में क्या आता है? Rest of the world. So we will be drawing our rest of the world downwards. So rest of the world. Now what is happening here? From the rest of the world or from the foreign sector to the household, what is getting paid? Foreign remittances. As in, if you are working for a foreign sector, you are getting paid for that. So that comes under your foreign remittances. That is called your foreign remittances. That is your appropriate or exact word. So from the rest of the world to the households, if you are working for a foreign firm, you are receiving foreign remittances. And from the household to the rest of the world, what is happening? Obviously, you will be buying goods from the rest of the world, or you will be buying foreign goods. So you have to make your payments for that. So that comes under your payments. Payments for imports. So from the rest of the world to the households, it is going foreign remittances because you are working for the rest of the world or for the foreign sector. And from the household part to the rest of the world, what is coming? Payments for imports, because you will be buying goods or services from the foreign sector. Now, from the firms to the rest of the world. From the firms to the rest of the world, what is happening? Similarly, as you're buying, as the households are buying goods and services from the rest of the world, the firms might also need some goods for their production, so they have to make their payments. So from the firms to the rest of the world, what can happen? Payments for imports as well, and from the rest of the world to the household, what can happen? They can, like the firms, they might export goods to the rest of the world, and the rest of the world or the foreign sector, they have to make those payments to the firms. So receipts for exports. Okay, so this is basically the four sector model, and in the four sector model, all the sectors are, we are taking it into account. So I'm just giving a brief explanation. In the two sector model, without savings and investment, what is happening there? Our savings and investment and financial market part is not coming. From the household to the firms, what is happening? Flow of services, because we are working for a firm and we are providing our services to the firms, right? And from the, obviously we won't be working for free, so from the firms to the household, what is happening? We are receiving payments. Clear? Then the firms, they are the one who does the production, so from their side to the household side, there is a flow of goods and services. We are buying goods and services from the firms, and the household sector, as in we are making the payments to the firms as well for those goods and services. This is your two sector model without savings and investment. Without savings and investment, it is assumed that whatever the household sector are earning, like whatever their income is, they are using it all, or they are spending it all on the goods and services that are produced by the firms. But in two sector model with savings and investment, kya ho raha hai? The savings is coming into the picture. What is happening now? Whatever money the households are receiving from the firms, they are now dividing it into two sectors, as in the savings part, and they are buying goods and services. They are making the payments. So now if there is a savings, the savings is basically what? It is for our own benefit. So we can say that the savings, if you are doing it in your own home, it is not benefiting the economy in any way. So it is going out of the circular flow. So savings can be called as a leakage. It is going out and is not benefiting the economy. But the same savings, if you are depositing it in a bank, from which the firms can take loans, and then what is happening? If you are depositing the money in the bank, then the firms, they are receiving the same money in the form of investment. So that savings that you were depositing in the bank is now going out to the firms in the form of investment, or you can say that savings was a leakage and investment is now working as an injection which is coming back into the circular flow of income. Then comes your government. This was your two sector model with savings and investment. The most important thing is two sector, like among all the sectors, the two sector model with savings and investment is the most important. But still we will be studying the rest as well, like we have done. I'm just giving a short explanation. Now what is happening in the three sector model? The government sector is coming into the picture. So from the households to the firms, from both the sides, they are paying taxes to the government. So that is the flow that is happening from the household to the government and from the firms to the government. Now, what is the government giving to the household sector? They are giving factor payments or transfer payments. Transfer payments, as I said, that comes under your, like anything which you are receiving from the government, for which the government is not asking anything back from you. That comes under your transfer payments. Obviously, if you are receiving a scholarship, you have to secure some good marks. Like there is a basic criteria, you have to fulfill that. But the government is not asking for anything like apart from that. So that comes under your transfer payments. And factor payments is what? So as we are working for the firms, we are also working for the government as well. So we are getting paid. So factor payments are those payments. And then comes from the government side to the firms. What is happening? Government purchase and subsidies. Government purchase, as in the government will be buying goods or services from the firms, similarly as we or the households are purchasing. So government purchase comes into that sector, and subsidies, as in those firms who are in need of money or something, they are receiving subsidies from the government. This is your three sector model with, and three sector model is with savings and investment. It does not comes without savings and investment. So if you are given the three sector model, you have to mention your savings, investment and everything in that. Then comes your four sector model, that is rest of the world or the foreign sector. यहाँ पे what is happening from the rest of the world to the household, what is going? Foreign remittances. As in, if you are working for a firm, like in the two sector, we did it both ways, as in flow of services was going, for that we were making the payments. But यहाँ पे we are just assuming that we are working for the firm for the rest of the world or the foreign sectors, and we are receiving foreign remittances. We are just drawing the flow of remittances here, as in we are working for the foreign sector and we are receiving payments on behalf of it. So that goes from your rest of the world to the household. And from the household to the rest of the world, what is coming? Payments for imports. As in, we might be buying imported goods. So that is our payment. Like we have to make payments for those imported goods. So payment for imports comes into that sector, into that division. Now, this portion we have done. Now, from the firms to the rest of the world and from the rest of the world to the firms. What is happening? From the firms to the rest of the world, similarly as we are buying imported goods, the firms might also need goods which they use for production, like any foreign goods which they need for production. So for that, they also have to make payments. So payment for imports. And similarly, like the firms will be buying from the rest of the world, it might so happen that the rest of the world might also need something for the firms. So that comes under your receipts for exports. Like the rest of the world, they are paying for whatever goods or services they have purchased from the firms. So that comes under your receipts for exports. So the circular flow of income we are done with. I hope it's clear to everyone. The two sector model without savings and investment, with savings and investment, the three sector model and the four sector model. Now, there might be a question which can be given that explains circular flow of income, and you have to talk like the real flow and the money flow that is going on simultaneously. It was there in one of the year's papers. So for that, what do you have to answer? It's not like you just have to mention what is circular flow and what is real flow and money flow. Obviously, तुम लोग को explain करना पड़ेगा what is circular flow. Then what circular flow के under what are the two flows, real flow and money flow. You have to explain that, and you have to give a diagram and an explanation of the two sector model with savings and investment. Like where, if anywhere it is not mentioned ki with savings, without savings, the only thing that you have to draw is with savings and investment. That is your utmost priority and that is utmost important. So for the answer, what do you have to do? If the question is explain circular flow of income and your money flow and your real flow that is going on simultaneously in the economy. So you have to give your circular flow explanation, then you have to give your money flow and real flow explanation, then you have to give your two sector model with savings and investment, the explanation as well as the diagram. So that would be your answer for it. And basically, like if straight on questions are asked, then you know what you have to do. Now we have completed our circular flow of income. We will be moving on to the sums, which is the next important part from this chapter. Okay. So national income, before moving on to the sums, we need to understand certain things, because for each and every method we know that, like those who know or those who don't, I'm just giving a short brief that national income mein what are the three methods that are used to calculate, to do the sums. First is what? Value added method, which is very easy. All the three methods are easy actually. Value added method, then comes your income method, then comes your expenditure method. Okay. Before, okay. So for the value added method, before moving on to all the methods, the first things that we have to keep in mind is, suppose we have been given any value at GDP MP and we have to convert it to NNPFC, right? GDP MP as in gross domestic product at market price and NNPFC as in net national product as factor cost. All the words like all the, यहाँ पे क्या है, gross है and यहाँ पे net है, so all the factors are getting changed from here to here, right? So what are the things that we have to do? If we have been given gross and we have to convert it to net, then what do we have to do? We have to deduct our depreciation. Now, if we are, now this can also happen कि we have been given NNPFC and we have to convert it to GDPMP. So net to gross, what do we have to do then? We have to add our depreciation. Clear? So first of all, we will be looking into each and every factor before changing it, because a single mistake that can give you the whole answer wrong, and if your answer is wrong, it's not other subjects that you will be getting part marking or step marking. If your answer is wrong, then the whole sum, like your 6 marks, is gone there. So from gross to net, what do we have to do? We have to deduct our depreciation, and from net to gross, what do we have to do? We have to add our depreciation. If in the sum depreciation is not given directly, you have to see if there are any gross values or net values given or not. If it is not given, then you will count your depreciation as like the value of depreciation to be 0. But if gross and net is given, then you have to find out your own depreciation there. That would be gross minus net. So what do we know now? If we have to go from gross to net, we have to deduct our depreciation. If we are going from net to gross, we have to add our depreciation. And if depreciation is not given, we have to see if we have any gross value or net value. If we have those values, we can find out our depreciation from that, right? And if nothing is given, then our depreciation would be calculated as 0. We will take into account 0 to be our depreciation's value. Now, second thing, so these are the two factors that we have taken into account. Now, what is our next factor? From our domestic to our national. So, if we have been given a domestic value and we have to calculate our national value, what do we have to do? From domestic to national, we have to add our NFIE. NFIE as a net factor income from abroad. And from national to domestic, we have to deduct our NFIE. Now the same thing, if NFIE is not given directly, what do we have to do? The formula to find out our NFIE would be factor income from abroad minus factor income to abroad, right? So if we are given, if we are given domestic and we have to go to national, what do we have to do? We have to plus our NFIA, and if we are given a national value and we have to take it to domestic, then we have to deduct our NFIA. And if NFIA is not given directly, we have to look for these two values, factor income from abroad and factor income to abroad. Now suppose in your sum, net factor income from abroad is not given and factor income from abroad is not given. You have just been given factor income to abroad. Assume that to be 100. So what do you have to do then? You have to assume this one, factor income from abroad's value, to be 0, and according to the formula you have to do. So basically your NFIE's value would be minus 100. You are getting a minus value because factor income from abroad is not given. So whatever value is not given, just count it to be 0. Okay, so from your domestic to your national, we have got both the products remains the same. Then comes your MP to FC. if we are given MP and we have to take it to FC, then what is the case? We have to deduct our net indirect tax, NIT as in net indirect tax. If you want, just write down the full forms. Because in your paper, NIT won't be given, the full word net indirect tax would be given. And if net indirect tax is not given, what are the things that are given? IT as in indirect tax and subsidy. For this, what do we have to do? We have to deduct our IT and add our subsidy. To avoid confusion, just do not put these in brackets, नहीं तो like it might be that you will be confused कि अगर बाहर में minus value हुआ, and if you put this in bracket, minus minus plus and all those confusions you will get. So just do not put any brackets, minus IT plus subsidy कर देना to avoid confusion. And from your FC to MP, just the opposite, plus NIT. And if NIT is not given, then what will be given? IT and subsidy. So just the opposite as to what we did earlier, plus IT minus subsidy. These are the few things that you have to keep in mind while doing any of the three methods, because for all the three methods, these three things or a few things, you will be needing it. Because at the end, whatever the sum is, if you are said to calculate your national income is what? Your NNPFC. So if you are asked to calculate your national income, you have to find out your NNPFC. Even if you are given GDPMP or NDPFC, whatever is given, you have to take it to your NNPFC. Or just look at this, read the sums properly, because in some sums it might not be given NNPFC, like it might be written not to find out national income but to find out some other factor as in NDPFC or whatever it is. So if you know what are the changes you have to do, you can change it to anything. So now, if we want to do this total thing as a whole, what will be it? GDPMP to NNPFC. What are the things that we have to deduct and add? First, we have to write our GDPMP value. Gross and we are going to net. So, यहाँ पे what did we do? Minus your depreciation. So, minus depreciation. Then, domestic to national. What did we do? Plus our NFIA. So, here we will be writing plus NFIA. And from MP to FC, what did we do? Minus net indirect tax or minus IT plus subsidy. Similarly, if you are given your NNPFC and you have to find out your GDPMP, for that you just have to do the opposite. You will be given your NNPFC value. Now what do you have to do? From net to gross, you have to add your depreciation. From national to domestic, you have to deduct your NFIA. From FC to MP, you have to add your NIT. Or if you are not given NIT directly, you will be given your IT and subsidy. So you have to add your IT and deduct your subsidy. So these are the few things that you have to keep in mind before starting on with the sums. Okay. I hope it's clear to you, because if you do not know these formulas, you won't be able to, like, sums, it will go wrong if you do not know exactly what you have to do. Okay. So the first method is value added method. After giving the formulas, we will be solving a sum on this as well. So value added method mein, there are some simple steps that you have to follow when you are doing your value added method. What is the first step? Step 1 would be, you have to find out your GVA MPs of all the three sectors, as in not your household, your business and all those sectors, as in your primary sector, secondary sector and tertiary sector. GVMP as in gross value added at market price. So GVMP of primary sector, like individually you have to find it out all. it is a bit lengthy, but to get your answer 100% correct, you have to like do all the formulas and all the steps. So GVMP of primary sector, what is the formula for that? Value of output minus value of intermediate goods. Now you have to find out your GVAMPs of all the three sectors, as in GVAMP of secondary and tertiary as well. And the formula for all the three would be the same. It would be value of output minus value of intermediate goods. So after finding out the GVAMPs of all the three sectors, what would be, that would be your first step. So in your hand, what do you have now? You have your GVMP of all the three sectors, your primary, secondary and tertiary. What would be your second step? Your second step would be to find out your GDP-MP, gross domestic product at market price. And what are you supposed to do here? The formulas that we use, that is not needed here, that we will need it in the next step. So GDP-MP, to find out GDP-MP, what do you have to do? You have to add all the three GVAMPs together. Suppose the GVMP of primary sector is rupees 100, of secondary sector is suppose rupees 150, of tertiary sector is suppose rupees 250. Clear? So GVAMPs of all the three sectors, after adding it, I'm just writing it in short, of all the three sectors, what would be the value? It would be rupees 500, right? So you got your GDP-MP now. Now, after you have got your GDP-MP, in your sum, if it is said that you have to find out your NNPFC, as in your national income, we are working with that just because this is a national income chapter, we are doing the formulas according to the national income. So, NNPFC, the last step would be, or our ultimate motive would be to find out our NNPFC. So, what do we have to do here? GDP-MP from gross to net minus depreciation from domestic to national plus NFIA, and from market price to factor cost minus NIT, or minus IT plus our subsidy. So that would be it. These are the three simple steps that you have to follow while doing value added method. The first step would be you have to find out your GVAMPs of all the three sectors, and the formula for that would be what? Value of output minus value of intermediate goods. You will be given all the values separately, and if it is not given separately, let's just come to that a bit later. So if you're given all the like value of outputs of primary sector करके कुछ value दिया हुआ है, rupees 100, rupees 150, whatever it is, and value of intermediate goods of primary sector, you will be mentioned whether the value of output is of primary sector or it is of intermediate goods or of primary sector. So all the values will be given separately. So you will be able to complete this step. Now after you have got all the three values, you can find out your GDP-MP from there. And GDP-MP के लिए you have to add all the three GVMPs. After that, what do you have to do? You have to convert it to your NNPFC, as in your national income, which would be your ultimate motive for all the sums if something specific is not given. Like if something specific is given to be found out, then you have to look into that then. Until and unless you have to find out your NNPFC. Okay, now that what I was saying, if suppose your value is given, directly it is given that value of output is 1500 and value of intermediate goods, that's 1500 as well. So what do you have to do? And nothing is mentioned like it is of the primary sector or secondary sector or tertiary sector, it's not mentioned. So what do you have to do? You have to assume that all the three value of outputs, it has been totaled, like suppose 500, 500, 500 karke, like each and every sector's GVMP and the value of output was 500. So you have got your 1500, like they have done the calculation on your behalf and they have put the value of output here and value of intermediate goods as well. All the three sectors value of intermediate goods is given as a whole. So for if sums like this is given, then what do you have to do? You have to avoid the first step. You have to directly jump to your second step, as in GDPMP. Then what will you do? GDPMP is equal to what? GDPMP would be equal to your 1500 minus 1500, which is coming to 0. लेकिन sums में 0 नहीं आएगा. You will be given a proper like values. So 1500 minus 1500, basically that would be your 0. So you will directly jump onto your GDPMP value. You have to skip the first part if you're not given all the values separately, right? Now, I hope that the value added method is clear to everyone. You have to follow 3 simple steps if all the values are given, and you have to follow 2 simple steps if the values are given all together. Okay. So, we will be doing a sum on this now. Okay. Just 2 minutes. Don't. Okay. Fine. Okay. So this is the first sum that we will be doing. यहाँ पे there are some values that are for income method and output method, as in your value added method. Your value added method might also be called as, like in your paper, if value added method is not given directly, it might be called as output method or product method or net output method. So whatever words are given, you have to see that in the table what are the things that you are given. If it is just written, it might be so that it is not written any method, they have just written calculate your national income. That might also be the case. So from here, just neglect the values of your, like any other method which has not been done yet. So the first value is what? And in your table there might be certain values, I am just saying it beforehand, there might be certain values that are given just for eye wash, like those are not even needed in any of the methods, there might be so you have to do your sum accordingly. So here, like everyone take out your copies and do the sum. So for output method, what is our first step? Our first step would be what? Value of output. And the thing that I said, ki if all the sectors are not given individually, then what do you have to do? You have to skip to your second step, that is to finding out your GDPMP. So GDPMP, यहाँ पे we can see that all the sectors are not given अलग से. So our first step would be what? GDPMP is equal to value of output minus value of intermediate consumption. And what are the two values that we are given? 2400 and 1200. So GDPMP would be is equal to value of output minus value of intermediate consumption, which is equal to 2400 minus 1200. Okay. So our sum would be the first step GDP-MP, because all the values are not given, so that is why we are skipping to this second one. But if all the values are given, you have to do it individually. कोई shortcut method use मत करना. Value of output minus value of intermediate consumption, right? What was the value of output? It was 2400, and intermediate consumption का कितना था? It was 1200. So what are we getting? 1200 as well. So GDP-MP का value कितना आया? 1200, right? Now what would be our second step? In the sum it was written that you have to find out your NDP-FC and NNP-FC. Let's go back to the sum once. See, calculate NDP-FC and national income by income and output methods. We have not gone to income method yet, so we will be doing the whole sum with our output method, right? So output method mein we have got our GDP-MP values. Now if we are converting our GDP-MP to NNP-FC, what are things that we have to consider? GDP-MP minus depreciation we have to do. We have to see if our depreciation value is given. So we can see in the table depreciation value is what? Consumption of fixed capital. Consumption of fixed capital is also known to be our depreciation. So that is another word for depreciation. So depreciation value would be 150. Then we have to see if we have our NFI. We have? Yeah, we don't have our NFIA directly. We have factor income earned from abroad and factor income paid abroad. So 180 minus 30 would be our NFI. Then what do we have to see? We have been given our net indirect tax or not. We have not been given our net indirect tax directly. We are given what? We are given our indirect tax and subsidy. What is the value of indirect tax? Sorry, I just missed out a bit. Sorry. Factor income earned abroad is 30 and factor income paid abroad is 60. Because of the linings, it's a bit difficult to understand. So when you're doing the sum, if like it might so happen that you also goof up as well a bit. So just put a scale or at least see which numbering you're putting it from. So indirect tax is 180 and subsidy is 30. Okay, let's go back to the sum once. So consumption of fixed capital is minus 150. Okay. GDP-MP minus our depreciation plus our NFIA and minus IT plus subsidy. We have not been given our NFIA, so we have been given our factor income earned abroad and to abroad. So GDP-MP, what is the value of GDP-MP? 1200 minus depreciation. What was our depreciation's value? Let's go back again and see once. Depreciation's value was 150. So we will be putting 150 here. Factor income earned from abroad was 30 and paid abroad was 60. And then was our IT. Sorry. IT is what? 180 and subsidy is 30. So IT is 180 and subsidy is our 30. So with this we can find out our NNPFC. Just do the calculation and find out your NNPFC and let me know in the comments that what is the answer. Okay. So after this we have to calculate what? Our... Okay, I'm just waiting for a bit. Give me the answer in the comment section. Solved. Hurry up and solve it and send me the answers. Yes. 870 is the correct answer. Okay. After finding out your NNPFC, what is the other thing that we had to do? We had to find out our NDPFC. Like if we had been doing this through our income method, then NDPFC, the first step of income method would have been to find out our NDPFC. But because we are not doing it through our income method, we are doing it using our output method. That is why NDPFC would be what? So we have our value of NNPFC, we have to take it to NDPFC. So NNPFC, what is the only factor that is changing? From national to domestic minus NFI. So NNP, what is NNPFC's value? 870. And how much is NFIA? We know that it's like 30 minus 60, so it will be 30. So the value for our NDPFC would be 840. So this is the sum, like these are the types of sums you might be getting for your value added method. Value added method is quite simple if you practice it a few times. The main thing is what you have to see, like when you're changing the factors, what are the things that are changing, like minus depreciation and plus NFI, all these things you have to check. Sorry. Okay. So just practice these things like a few times, you will be okay with it. I hopefully, like you have to practice it quite a few times, like when you're going from GDPMP to NNPFC, what are the factors that are changing, what are the things that you have to do, like whatever factor, like you shouldn't be the one sitting in the exam and thinking that what do you have to do there. Fine. And if you haven't subscribed to the channel yet, you can subscribe it and hit the like the icon, the link button, so that whenever we upload a video or whenever there's a live session going on, you are immediately notified and you can join. Okay. So today we will be doing till here. That would be the end of our session. The next day we will be continuing with because we have just done the value added method, we have our income method and our expenditure method left, and also we will be doing graphs, because the graphs from the third chapter is quite a trick to do. So we will be doing the third chapter. We will be continuing with these three like these few things tomorrow, or whenever the next live session is, you will be informed. Like you obviously, if you subscribe to our channel and hit the icon link button, you will be given the notification immediately whenever the live starts. So that would be the end of the session for today. Thank you.